Hello and welcome to this edition of the weekly video market updates from FBS.com. Let's kick off this video as always with the topics that we'll be covering today. The US dollar index retracement attempts continues with small gains. Will it continue this week? Gold posts the first weekly decline in 9 weeks. For how long? And is it an opportunity to buy it again? No significant economic releases this week, yet volatility is here to stay. So what are the opportunities? We'll start with the US dollar index today, which we noted last week that the upside retracement is confirmed. Indeed, the US dollar showed some strength at the beginning of last week trading, reaching as high as 93.80 before trading within a tight range until the end of the week and closed the week above the 93. Yet the US dollar index also posted its 8 weeks of consecutive declines, which eases the possibility for further declines ahead. And this week, we maintain our outlook for the upside retracement as long as it stays above 92.90 and 92.50. But on the upside view, the first target stands at 93.18, followed by 93.35. While a break above those levels should clear the way for further gains, possibly towards 93.50. From the US dollar index, let's move to gold prices, which posted the first decline, or the first weekly decline, after 9 weeks of consecutive gains, declining all the way back toward $1,863 before it stabilized and regained above the $1,900 and closed the week around $1,945 an ounce, which is also above the previous record high back in 2011. In the meantime, further downside retracement is highly possible amid the expected upside retracement in the US dollar index as well. Furthermore, profit taken may continue, but after a short-term bounce, which may lead to retest the $2,000 an ounce once again, yet it is unlikely to break above that resistance this time. And we believe that the downside retracement is likely to continue all the way back to 1900 for now, amid the continuous stabilization in global equities first, in addition to the announcements from Russia and China about the COVID-19 vaccines. From gold, let's talk a little bit about some major currencies today, beginning with the euro, which also managed to stabilize well above 1.17 last week and found some buyers, posting 8 weeks of consecutive gains amid the lack of fundamentals across the week, or at least last week. But this week, it is not very different, as there are only few economic releases ahead. Yet, technical indicators are still pointing to a possible downside retracement before the upside trend resumes. Such outlook remains unchanged as long as the euro stays below 1.1870, which we considered as the good shorting, or as a good shorting area. On the downside view, another leg lower is possible to retest 1.17, and while a breakthrough that support is likely to clear the way for further declines toward 1.16 before we start looking into any long positions, not only on the short term but also on the medium term as well. Finally, the British pound has the same scenario, but the sterling dollar traded within a tight range for the second week in a row, while holding well above 1.30 once again. Yet, the technical indicators are still favoring a downside retracement before the upside trend resumes. Therefore, we are still favoring shorting the pair this week around 1.31 to retest 1.30, while the breakthrough that support would clear the way for further declines, possibly toward 1.29. But such outlook remains valid as long as the British pound remains below last week's high. This is it for today. Thank you all for watching this video and the previous videos. Please like and share this video. Hit the subscribe button to get our latest video. Also, you can follow us on our social media sites to get the latest economic releases, reports, and analysis. Thank you for watching once again, and I'll see you later next week. Have a great trading week ahead.